Salim Essaid takes the wide view of the oil markets and assesses how fluctuating markets can potentially impact the diversification plans of regional countries.
In what's one of the biggest drops since the oil price collapse of 2014, the global benchmark Brent has fallen more than 20% since early October. Contributing factors included a surge in supply and increasing concerns about a global economic downturn. Slowing demand is of particular concern, not least in China, which is the world's biggest oil importer and the second largest crude consumer. Looking ahead to 2019, some market commentators are not expecting a dramatic uptick in prices compared to the year before.
I would be surprised if they were higher than they have been this year, and perhaps there is a correction going off at the moment, so perhaps the prices that we're seeing now is more representative of what we'd expect in 2019.
Despite recent falls, according to PwC, the average oil price of around $70 seen in 2018 means that in revenue terms, it was a good year for MENA governments overall. That said, Gulf countries like the UAE and Saudi Arabia are laying plans to diversify their economies away from a reliance on oil. The kingdom's Vision 2030 strategy outlines increasing non-oil industry trade and ramping up investments in sectors from tourism to manufacturing. Removing oil as an economic driver will, in the long term, help regional governments more easily meet their fiscal spending commitments and be less vulnerable to large cyclical swings. But preparing for a post-oil era is not without its challenges.
I think we're talking 10 years plus, but it's important to keep making gradual progress in the right direction on that diversification agenda. Because I think whilst it will take a long time to get there, when it comes, I think it will happen very quickly.
The litmus test of the coming years, some say, will be how committed governments in the region are to pushing through the all-important reforms and opening up of their economies to foreign investment and privatizations.